Assalamualaikum and greetings, madam. So my name is Fharhan Shakir bin Jabarali, and I'll be presenting the chapter 2 or the basic financial statements assignment. So moving on to the introduction part. So under the insurance markets, I've chosen the LPI Capital Berhad and also Syarikat Takaful Malaysia Berhad. So a little bit background regarding LPI Capital Berhad. It is initially known as London and Pacific Insurance Company Berhad. So this is an investment holding company started in May 1962. They obtained the insurance license from the Malaysian government in April 1963 and managed to be listed in BSKL in January 1993. So LPI Capital, through their subsidiary company, Longback, they offered wide range of general insurance for individuals and also businesses. So their products, there are variety of insurance products from their company, including motors, health insurance, personal accidents, and also investments like bonds insurance. So the closest competitor of LPI Capital is Takaful Malaysia, Berhad, Alliance Berhad, and also MNRB Holdings. So moving on to Syarikat Takaful Malaysia Berhad, this company actually it started in 1981, where the government of Malaysia started the initiative to hold or to establish an Islamic insurance company. So Syarikat Takaful Malaysia was later officially operated in November 1984. In 1996, they successfully relisted in BSKL, and they claimed that after 30 years of operation, Takaful Malaysia managed to be the leading provider of Takaful market. So basically, their business offered Takaful type insurance. In 2013, though, there are an act that made the company they had to split into general insurance provider and also the family insurance provider. So their closest rival is right now is Etika Takaful, Great Eastern Takaful, and also MAA Takaful. So that is the brief introduction regarding both of the company. So moving on to the statements of financial position of both the company. As you can see, this statement of financial position is important since it listed the the list of assets and also the value of total assets of the company. There are also the equity listings and also the total equity value, and also the list of the liabilities and the total liabilities value. So the equity is really the amount of that will be given to the shareholders. As you can see in the assets, we have the quick assets and also the total assets, and then the liabilities. This is the overall outlook that we need to find, or what we can find to calculate liquidity ratio and also leverage ratio through these statements. So next is the statement of comprehensive income. As you can see, there are operating revenue, the net earned premiums. There are also other incomes and other expenses. And then you can see we have operating profits, profit before tax, and profit before for the year. So technically, operating revenue can also be regarded as the total sales value. And as you can see, they have deducted the other incomes and the net claims, benefits and stuff like that, and also other expenses. So we can have the operating profit, which is the gross profit. And then you have the profit before tax. And then you have profit for the year, which is the net profit. The final one after deducting all the expenses of the company. So next, we can move to the calculations information. You can see right now we were assigned to calculate the liquidity ratio, asset management ratio, leverage ratio, and also profitability ratio of both LPI Capital and also Takaful Malaysia. So you can see roughly, we can say under the terms of liquidity ratio, LPI Capital were doing better with their ratio of 1.74 and also 0.82. And under the terms of asset management ratio, Takaful Malaysia is doing much better with 0.6 and also 0.28, which is quite high compared to LPI Capital. In terms of leverage, the Takaful Malaysia is doing better in terms of debt ratio and also the time interest and ratio. So under terms of profitability ratio, you can see the gross profit margin and also net profit margin. LPI Capital is doing better. The operating profit also resides with LPI. Return on asset also made LPI Capital the leader, and return on equity, Takaful Malaysia had taken the advantage. So that is roughly the outcome of the calculation. And I will pass on the calculation analysis to my teammates, Farah. So that's all from me, madam. Thank you.
A very good day to Madam Hafizah. My name is Farah binti Mohamed Yunus and my metric number is 012022090537. Now I'm going to present about two companies, which is LPI Capital Berhad and Takaful Malaysia Berhad. Based from the analysis, compare the company's performance through the ratio based on cross-section analysis. So for the first one is liquidity ratio. LPI Capital ratioed around 1.74, meanwhile Takaful Malaysia Berhad is ratioed around 1.17, which means LPI's capital current ratio is 1.74, which means the LPI Capital's current assets 1.74 times more than the current liabilities. For Takaful, current ratio is 1.17, which means Takaful Malaysia's Berhad company current assets 1.17 times more than the current liabilities. For the quick ratio, LPI ratioed around 0.82 and Takaful ratioed around 0.78. Compared to the calculated ratios to the ideal value of a quick ratio of 0.82 of capital company and 0.78 of Takaful Malaysia indicates that both companies have quick assets that are slightly lower than their current liabilities. Takaful Malaysia's ratio is slightly lower, potentially indicating a relatively weaker liquidity position compared to LPI Capital. For second is asset management ratio. LPI Capital ratio around 0.11 inventory turnover, meanwhile Takaful ratio 0.6. Takaful Malaysia seems to have a higher turnover ratio, implying it's managing to inventory more efficiently compared to LPI Capital. For total asset turnover, LPI Capital ratio around 0.08, meanwhile total asset turnover for Takaful Malaysia is 0.20. Takaful Malaysia has a higher total asset turnover ratio compared to LPI Capital, suggesting that Takaful Malaysia is utilizing the assets more efficiently to generate sales revenue. Next is leverage ratio. Debt ratio, the LPI Capital ratio around 0.87 or 87%, and for Takaful is 0.85, which is 85%. Takaful Malaysia has a higher debt ratio compared to LPI Capital, suggesting that higher position of Takaful Malaysia's assets is financed by debt, potentially indicating higher financial risk. For time interest earned ratio, LPI Capital has ratioed around 3.2 times and total interest earned ratio for Takaful is 2.7 times. LPI Capital has a higher time interest earned ratio compared to Takaful Malaysia, suggesting that LPI Capital's company is more capable of covering its asset interest expenses from its operating profits. As for gross profit margin, LPI Capital has ratioed around 0.28, and Takaful Malaysia has ratioed around 0.27. LPI Capital Company has a slightly higher gross profit margin compared to Takaful Company, indicating that LPI Capital retains a larger portion of its revenue as gross profit after accounting for the cost of goods sold. For net profit margin, LPI Capital has ratioed around 0.19 and Takaful net profit margin is 0.08. It indicates that LPI Capital has a higher net profit margin compared to Takaful Company, suggesting that LPI Capital retains a larger position of its revenue as net profit after accounting for all expenses. This could indicate a higher level of efficiency or profitability to LPI Capital Company. As for operating profit margin, LPI Capital Company has ratioed around 0.26 and 0.28 and Takaful ratio around 0.27. It indicates that LPI Capital Company has a slightly higher operating profit margin compared to Takaful Company, suggesting that LPI Capital retains a larger portion of its expenses. This could indicate better operational efficiency for LPI Capital. As for the return on asset, LPI Capital has ratioed around 1.6% and for Takaful return on asset is 0.02%. LPI Capital Company has a higher return on asset company compared to Takaful, indicating that LPI Capital generates a higher percentage of profit relative to its total assets. This could imply that LPI Capital is using its assets more effectively to generate profits than Takaful. And for return on equity, LPI Capital has ratioed around 3.8% and Takaful return on equity is 15.8%. Takaful Malaysia Company has a significantly higher return on equity compared to LPI Capital, indicating that Takaful Company is generating a higher percentage of profit relative to its shareholders' equity. This could suggest that Takaful Company is utilizing shareholder funds more effectively to generate profits. In the conclusion, LPI Capital scored 28% in operational profit margin and Takaful Malaysia managed 27% only. LPI Capital 1.74 liquidity ratio means they are enabled to perform their short-term obligatory better than Takaful Malaysia. LPI Capital Berhad quick asset ratio is valued at 1.17, meaning their instant cash support is on higher rate than Takaful Malaysia is 0.82. Takaful Malaysia is better at handling inventories and assets as they were rated at 0.6 compared to LPI Capital at 0.1. Takaful also had higher debt ratio than LPI Capital, evaluated at 85% to 57%. In terms of hitting interest pay ratio, Takaful did better in 2.7 times compared to LPI Capital in 3.2 times. LPI Capital had a 28% gross profit ratio where Takaful only had 27%. LPI Capital net profit margin scored 19% while Takaful only scored 8%. LPI Capital Berhad demonstrates better performance than Takaful in terms of liquidity ratios and operations efficiency. So in conclusion, based on the analysis and the calculation of related ratio, several conclusions has been made regarding the risk and potential profit on both company. In general, LPI Capital had better financial ratio indicator. LPI Capital had shown to have higher ratio in their quick asset and current asset. LPI Capital scored slightly higher over Takaful Malaysia Berhad in terms of profitability ratios, gross profit ratio, net profit ratio and operating profit margin. Hence, by evaluating the four subject of ratios, LPI Capital Berhad is a better investment to make on compared to Malaysia Berhad Takaful. Thank you.